Chinese auto major BYD's proposal to invest $1 billion in a car factory in India has not found favor with the government and could be stalled. The proposal was in a joint venture with Hyderabad-based Mega Engineering and Infrastructure Limited, to which BYD provides technology for e-buses. The Income Tax Department is also investigating at least 40 Chinese solar module manufacturers, which includes companies such as Trina Solar Limited and Longi Green Energy Technology. The department is also scrutinizing their Indian distributors for potential tax evasion. Following the border conflict in 2020, the Indian government banned more than 300 Chinese apps. Subsequently, Chinese firms faced increased scrutiny, requiring additional government approval for investments in India. The Indian government has asked Chinese companies like Xiaomi, Oppo, Realme, and Vivo to bring in Indian equity partners and appoint Indian executives. Raids were also conducted at the offices of Vivo. The sensitive nature of the telecommunications sector has led to increased scrutiny of Chinese telecom companies. Huawei and ZTE were under scanner for a while before being barred from participating in new technology or 5G network deployments. Sanjay Bhattacharya, former secretary to the Ministry of External Affairs, explains the rationale behind the scrutiny.
The main reason for scrutiny is the lack of Chinese introspection in the ways they do business, because they try to circumvent the laws of the land and even international rules. They will naturally come under scrutiny. China has violated all the boundary agreements that were enacted between India and China, and therefore is in violation. It is unreasonable to expect that we can have normal economic relations.
To safeguard Indian companies from opportunistic takeovers and acquisitions, during the pandemic, the government amended the foreign direct investment policy. It mandated entities from countries sharing a land border with India to invest only through the government-approved route. The policy shift marked the beginning of increased scrutiny of Chinese companies and investments in India.
If you look at the challenges that the Indian companies faced in COVID, one was the fear of takeover. Two, as from the government perspective, a lot of individuals in India face the challenge of inappropriate gaming apps, inappropriate financial apps, which were duping the consumer. The third one was relating to data security of Indian private data, as well as data of what these apps would track, and therefore the combination of these five aspects, right, was what led to the specific notification press note 3 in terms of investment, and the action that was taken in banning particular apps. It started with gaming apps, then other financial service apps and other apps in India.
So, how does scrutiny impact various sectors?
The particular impact of this will be in some of the renewable energy sectors. Because of Chinese violations, India has stepped up its solar production, for instance. The second is in the pharma sector, because while we were hugely reliant on Chinese APIs, we will see many more of these now being produced in the domestic sector. The third area that I think will be critical will be in the growth of our startups, of our innovation sector, because as you know, the Chinese have invested deeply in many of our startups, and many of the unicorns have very large Chinese funding. But I suspect that this will go down over a period of time.
While Indian authorities have been scrutinizing Chinese investments, there are signs indicating their willingness to consider Chinese capital infusion in specific sectors. The key here is building trust and addressing security concerns. Dilip Chinoy shares his insights on the road ahead in this regard.
Each of the sectors and each of the companies is an individual case. Has got their own individual challenges. So the first thing is that the company should, in a transparent manner, agree to and actually demonstrate that they're complying with every Indian law. Second, it should be very clear that they have a transparent ownership structure, and it does not go to the ownership of the state, The third is they should actually demonstrate that they're carrying out free and fair financial arm's length financial transactions and not evading taxes or not doing other things like that. The fourth is they should look at being transparent in the companies and the ownerships and the institutions they fund. And the fifth is they should try and integrate with the whole ecosystem.
Chinese companies in India are under scrutiny due to a combination of national security concerns, economic considerations, and geopolitical shifts. The scrutiny impacted various sectors, triggering efforts to create a level playing field for domestic industries. Balancing regulation, trust building, and adaptability remains crucial as India navigates the complex landscape of global economic and political relations.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.